Hi guys, welcome back to my channel, Finnyfella Trading, my second video. So I'm a wee bit nervous, but I'm sure I'll get through it. So I just thought I'd kick right into it straight away and start off by saying if you don't understand what I'm talking about and the phrases I use, um, please do head over to ICT, Inner Traders or Inner Circle Trader channel, and go through his content, and then you'll start to understand the phrases I come off with, like fair value gap and breaker and order block, all, by the way, coined by ICT, by Michael J. Huddleston. Nothing to do with me. I never coined any of these things. This is somebody, again, who's been trading 30 years. He's, he's a bit of an OG, if you ask me, of modern day trading. I've read a load of books. I've went through them all and regurgitated stuff. And yes, successful traders, but very old school. So this guy is like old school meets new school. And I'm just going to kick in it. If you don't understand the phrases, don't worry. Go to his channel, Inner Trader Circle. Check out his things. You'll begin to understand what I'm talking about. So I'll kick right in by saying this is the only currency I'm going to do is the cable, British pound, US dollar. Um, just because I kind of like how it moves. I like how it reacts to certain places and how it seems to have a wee bit of structure without the mad spikes or the constant retracements to, or testing the same zones again. So I'm just going to start off in the monthly here, and this is, to my knowledge, how I see the markets, how I see things that might be right or wrong, but again, it's the whole accountability. It's to give me an ego a bit of a boost and give me an ego a bit of a batter, and just depending on the result. So here we are in the monthly, as you can see from, like, what's this, July 2001. We have been on a downward trend in the markets, and the market has bottomed out here. I believe possibly because it hasn't hit this low since 1985. Like, that is a long time for a market to come down that far and break this low. Now, we've had months upon months of short trading in the market in GU, and I feel like maybe now we might see a reversal. Going by the US dollar index and the British pound index, just about now, this date is the 14th of November 2022. I feel like the market's kind of making a reverse. Now, the market does depend a lot on central banks and interest. And right now, the Bank of England interest rates is 3%, and America is 4. So this could just be a slight retracement, but we might see here this fair value gap here. I just like the market as a possible area where the market might actually retrace into. This is something, fair value gap is something that the inner circle trader ICT has coined. It's something that you can look for now, to give you an idea of market direction. Because personally, I'm terrible with market bias. So many times I've got it wrong, and I think it's a big thing as a trader. Like, if you know mostly what direction the market's going to go, then you can say to yourself, just to put the probability in your corner, just slightly, that I'm only going to buy this month or this week or today, and you can forget about the sell trades. So for me, bias is tough. It's something that I think is vitally important, and hopefully after another while, I get the hang of it. I can't always get it right. Trading, you're not always going to be right, but hopefully, hopefully, I learn the best now. But so here we have the fair value gap on the monthly. I'm just going to take my fib retracement out, and I'm just going to roughly set it here to here. So one of the things about the inner circle trader is he doesn't rely on the fib, but he likes to use it as, you know, as a way of lining things up. I guess like we can line up this fair value gap with this 0.68 and what inner trader would consider ACT as optimum entry level. That's 0.705. It was basically, the center of these two areas. And as you can see, it does line up with one of these areas. It does. It just gives you an area where you can realize, like, this is where I could possibly look for a reaction, say, for the market to come back down and possibly go and test this zone again, if you know what I mean. So up into here, excuse me, I'll delete that. The market has come down. It's took out that 1985 low, and it could come back up in here and possibly test it again. Who knows? Not me. Not at the minute, anyway. So to me, that's like, right, I'm gonna maybe lean towards buys from now on, just because there's fair value gap. But I like to break away down because I don't hold trades for long. I'm not. I like to do intraday trading, which is basically from minutes to hours of trading. To be honest, just depending on how quick the market might move. But we'll break it down into the weekly. Here we're having the weekly. These areas I have marked out here, you'll see in the daily where it gives you an idea where the market and liquidity lies. Another thing, I'm not going to go into detail about why I've done this. I'm only going to say this is something I am trying to learn again on ICT's channel. And if you come to this point, it'll all click together of what exactly I mean. So the weekly has me believing we're going to take out this 80-day buy side liquidity again. Why? Well, up here is a fair value gap again. A fair value gap, just to give you a rough idea or a quick lesson on it. I'm not even going to call this lesson, but from this candle's low to this candle's high is a gap. Between this candle and this candle here. There's no wick. It hasn't wicked up in and covered that area. So we could see the market take this 80-day buy side liquidity out and come up into this fair value gap before possibly coming back down. We don't know. Until then, we can only assume, I guess, for want of a better word. Now I'll go back, I'll go into the daily. Daily we have broken down here a wee bit. So you can see there's a fair value gap in here. We've had a few days impulse. Friday the market moved a lot, so it did. I'll just mark this out. We had some news. It pumped. It moved very quick, but it hasn't come back to fill this fair value gap. And we'll actually use a trend line here. Sorry, just to mark out this high. Just excuse me. What is the height of this candle? 15669. Coordinates 15669. 5669. And that would be the daily order block. Again, coined by ACT. So what could happen? We've had this impulse on a pullback into, again, almost touching ICT's optimal trade entry level and filling what is a very tight fair value gap. In fairness, it's small on the daily, but again, look at it. It's pinpoint stuff. It's pinpoint accuracy, and that could lead you to say to yourself, right? Well, on the retracements, I look for entries after these retracements, which I think this is what it's going to be before coming up to take out this 80-day high where I had previously marked for value gap. So this did come back down, but didn't quite break this low here. Still broke this, took out this buy side liquidity, took out this buy side liquidity, took out this buy side liquidity, and now possibly might attack this, but not before retracement. So liquidity's up here, and there's liquidity sitting down here, the nearest one to it, or this one. So in my eyes, I do feel we're gonna see the market come down into here, in this fair value gap, and possibly take out this 80-day high and take out what is also a fair value gap. Excuse me, fair value gap up here. That's assuming that's like we can't tell exactly what's going to happen. I can't. I'm not at that skill level yet. There's traders out there, especially again ICT, who seems to hit things with a very, very scary accuracy. He maintains that the markets aren't around him, and who am I to argue with him? Because he is showing that he can almost judge within the pip where the market's going to react and where it's going to go, and that's not random. That's a pattern or an algorithm that he's figured out, and he's given it to us for free. So ACT, if you are listening to this, which I doubt will ever happen, um, thank you for sharing your information, and I hope it pays some sort of homage to you as your unbeknownst student that might bring you a bit of, what's the word? You might be a bit proud of me. Put it that way. I hope. Because one ACT's things, the thing that rung off to me was, you know, if you're not holy and all that, that's okay, no problem. But I actually am, and so is he. So he said, he said in one of his podcasts, I believe I was listening to, that he asked God to show him what he needed to see in the church, and he'd spend the rest of his life, helping other people with this and showing them what he sees. And before I heard that, that's a prayer that I asked for. That's a prayer I said to God, please show me what I need to see, and I will spend the rest of my life helping other people at trading. And that's where the panic dropped for me. That's where, I guess, I'd say, the connection came where I thought, what, I really do want to follow this guy and listen to what he has to say. So again, ICD, if you're listening, thank you. I hope someday I see what you see, and I hope I can forward on the help to all people. Okay, right, back to the charts now. On the daily, say expect for a value gap to come back, possibly come off this order block before we see another impulse, up. And this would be coming down into the premium discount range, from what I understand. Okay, I'm going down to the 4 hour. Now here I have set an alert, which is say when I go down into the smaller time frames. Um, an alert to see if this sell side liquidity is taken out, or this buy side liquidity. Excuse me. My throat, and what's wrong with throat this hasn't been great. Say we see here we have expansion from this candle here, Came down to the 105, or sorry, zero point 0.5, and it went to the minus zero point 0.5 area. So that makes me believe now that we will see a similar retracement from this area to this area into the fair value gap again, the zero point 0.5 area, before we see another impulse that'll take out this 80-day high. That's what this line is here, where buy side liquidity sits. So right now, Monday, the 14th of November 2022, I feel like we are going to come down into this here before seeing a reaction impulse further up. Now, this could be Tuesday, Wednesday. We could see this fair value gap filled if we do. And we could spend Thursday, Friday coming up and attacking this buy side liquidity that sits up here and above this here. Now, let's go down into the 1 hour. And this is New York PM kill zone. That is marked out. I previously tried to trade in the New York kill zone morning. I read the market wrong and I got the trade wrong, which I don't mind. That's something you have to understand about trading is you cannot be afraid to lose. And like this is paper trading. Like if you're afraid to lose in paper trading, it's your ego is way too big. You are not going to learn this. You're not going to get this right all the time unless you put yourself out there, deal with the losses, pat yourself a wee bit in the back for the wins, but you have to understand your wins. Like, why did I win? You can't just hit buy or sell. Any donkey can do that. You have to understand why you won that trade. That was something I didn't do. I gambled at the start. I really did. So just what I'm saying is understand. Just because you lost doesn't mean you're useless. That you're not going to get a hang of this. That you're not going to figure this out. The only time you're going to lose in this is if you quit. That's when you really lose. If you quit this here, if you quit this, and this is tough, then you're going to regret it as far as I'm concerned for the rest of your life. And I ain't quitting. Not for no one, not for nothing. If ICT came on the phone to me today and says, mate, you're never going to make it, I would laugh at him. As good as he is, I'd just be like, mate, I'm not even listening to that. I will make it because I know I will. And you got to know that too. So hold on in there, keep going. You're not alone. I am with you. I am that guy that has lost over and over again, but I will succeed in the end. Okay, that's enough on that. Now, here was Friday. Sorry, Thursday. We had a massive news break here. Just blew things out of water. It shifted like there's 214. Let's go to the end of Thursday. We'll say 300, nearly 350 pips really in a day, single day. Like that's massive. That's broke structure. That has taken out all the buy side liquidity over here, and I believe it's going to attack this up here. So let's break it down into. We have the 1 hour. We've a fair value gap in here, if you can see it, from this low to this high, and it's below this sell side liquidity on the 1 hour. So I'll just mark it up just to give you an idea. I don't want to plaster my chart because it doesn't help plastering your chart. It confuses you. There's too many, too many things that go against one another. You just got to pick what makes sense to you and go for it. And this would make sense to me. It makes sense to me for this market to take out this sell side liquidity, possibly down in here. I will look for a reaction in here because it mightn't come down in here. I just don't know. But I know this area here is in the 1 hour. And I know that if the market does retrace down into here, it's either going to react and continue long, or it's going to continue down here and take out, fill up this fair value gap, especially. This is humongous. That's screaming at me that this needs to be filled. And then maybe look for more longs. But I say I'm intraday, so I'm not stuck hardcore to a base of what I am doing. I'm just getting a foundation in place, an understanding of where the market might actually go and where and when I want to be in trades. So as you can see here, this is the 1 hour for value gap that was marked up. We're down in the 15-minute time frame now. This sell side liquidity has not been taken out. Now, this has. And that's where I made the mistake is this morning I thought that we had this rally up, took out buy side liquidity here and here. And I thought it just dropped so quick. I thought it's taking out this sell side liquidity. I thought I'm going to take buys in here because it'll attack here, but I was wrong, which I'm not afraid to admit. But I done retail thinking, and retailers don't really understand buy side liquidity or sell side liquidity. They really don't. It's they just understand trend lines and all that trash and bull flags and all. And I'm not saying again that there isn't people out there that makes money, from doing that. Of course you can. The people does it, but it's not the true understanding or meaning of why the markets move the way they do. And that's what I wanted to understand. I want to understand why is it doing this? Why would it rush up here and then sink down here? Why would it do it? Why is it doing that? Like this rushed up here to take out this buy side liquidity and to fill this gap and the market opened. And it did. And then it sunk. And there like you'll see in the lower time frames as to what I mean and what I'm talking about. So in my head right now, I want to see this sell side liquidity taken out. Almost equal lows with this and this. And possibly coming down in this for a value gap and taking out these lows. Or could keep on going down. I don't know. I'm just going to react to what I see and what the market tells me at the time. Alright, 5 minutes. Here on the 5 minute. This is the New York midnight opening price. In case anybody's wondering. That is probably dead center of this range now. Close. And the trade I got caught out on this morning in the New York session was I entered a buy here when this buy side liquidity was taken out along here. This area right here, I'll just put a quick ray on it. Like when this buy side liquidity was taken out and this buy side liquidity was taken out and this pumped up, I looked for a buy. When really in reality, this is where I should look for a sell. Because that fair value gap below on the daily is a magnet to the market. From what I understand, ICT's teaching. So I'm just going to go down into the 1 minute because this will become clear, I hope, to people as to why I was wrong on my entry. So here we have, I'm going to mark out the New York kill zone. I'm going to go from 8 o'clock. Just go New York open 8 o'clock, which is here, to 10 o'clock, which is over over here. And I like to use it as purple. Right. So here we have the New York Open, 8 o'clock. Now, what I had marked out was buy side liquidity here. I'm going to turn on the buy side liquidity. This is only roughly, so bear with me. Level that out. Buy side liquidity here. I'll clone that. I had buy side liquidity here. And then I had buy side liquidity here. On that 8 o'clock open, I had said to myself, right, from roughly 6, the market has came up, made its way up pretty quick from, sorry, I say, 20 past 7. It made itself, it rallied up. This to me is a rally. Took out buy side liquidity here, took out buy side liquidity here. I thought we are going to see this buy side liquidity taken out, but it didn't do that. My perfect entry should have been after this candle broke this low. So just to mark it up for anybody who is green like me, who is learning like me, structure broken. This candle here, I'll zoom in a bit closer. This is what ICT calls a breaker candle. It's a break of structure. A break of structure. And two things I want to point out. There is a fair value gap here. There's a fair value gap. Maybe not the best color for people to see. This is a fair value gap. See the gap between this candle's low and this candle's high? And the breaker. I missed this at the time. And an even more important thing was this took out this buy side liquidity and this buy side liquidity and run into fair value gap in the 1 minute over here. And look at that. That's an order block, a 1 minute order block. Just look almost how accurate that is from here to here. Almost to the pip. Look how accurate that is. Before it absolutely sunk. And it's continued to do so ever since. This was my missed entry. This was in the New York Hill Zone in the morning. Fair value gap printed. Break of structure. And a breaker candle. And a run back up into it. Really and truly, I should have went for an entry up in there. And I like to use 20 pips at the minute because I am not that accurate yet. I need a wee bit of breathing room to allow for my entries. That could have been, and chase this sell side liquidity that I had originally marked out, which was across here. So we'll not go mental, but we'll say, we'll take it there a wee bit short. Say it was a 2-to-1 trade. That would have been me done for the day. So where did I go wrong? What did I do wrong? What confused me? Well, let's just mark up the sell side liquidity I was looking at the time to show you where I went wrong. Instead of having this entry, whenever this took out the sell side liquidity, and that came down fast as well, this is what caught me out, was it spiked in here, took out the sell side liquidity, which was the London low, by the way, and then it broke this structure here on this candle. Right, just to mark it up to show you what I mean. On this candle here, template. So whenever it broke this structure, I thought, well, it's took out the high, it's took out this sell side liquidity low. Maybe it's going to come back for this buy side liquidity here. So I seen, I'm going to zoom in a bit sooner, sorry about moving about a bit. But once it broke this structure here, and then it broke this structure here also. Clone. Just marking this up just so you can imagine what I was looking at the time. When it broke this structure here also, I marked up this fair value gap here. From this candle's low to this candle's high. And as soon, well, I also done this, sorry. I template trailing. This order block here, these two consecutive down candles, in my eyes was an order block. I entered the trade right here. And it never came back to actually even push on at all. And I haven't stop loss below this candle here. This is what confused me. This is what caught me out. What I didn't see was this fair value gap up in here. And to be honest, if I did see it, I probably still would have bought because I just thought it's taken out that low. Then it could come up to take out the buy side liquidity. But what did I forget? What didn't I think of at the time was this daily fair value gap here is a magnet. It's attracting that big time. And that should have lent my I guess my best for the day. It should have been sells only. But also look at this. And I'm not going to explain this either. This is all ACT, all his teachings. Just to clean up this bit of confusion here. When that market did break this structure here, on this structure here, look at where it reacted. That's the New York midnight opening. It came back up to test that one more time, and then it just plummeted again. So when I missed this initial move, I could have got back in here. Where the fair value gap was, and exactly where it topped off nearly New York opening. That could have been another sell trade for the day. 20 pip stop loss. So would have given me loads of breathing room there to come down to take out this next low. A bit short because I don't like going to the very low. And that could have been, that's a 5% day. That's how close we are to having great days trading compared to them small little mistakes. Is the difference between having a great day or a learning day. So that's what I wanted to record. This is the sort of thing I want to show you that goes through my head at times. The mistakes I make. I don't want to, hopefully I'm going to show you a lot more positive things. Like the victories I have instead of mistakes. But don't get us wrong. Losses aren't useless. They're vital. As long as you decide to learn from them, you don't take a huff, spit the dummy. You gotta learn from it. You gotta be willing to take a loss. Like I can go to my paper trading account here and show you my loss history. Let me see my account balance. So That is. Oh, sorry, my bad. I'm still actually learning how to use this myself, paper trade. So, in case you wonder why I started 70,000, it's because I'm going to go for the 70,000 FTMO account whenever I'm consistent. So, there's my trade. This is my entry price at 17341, which was should be around here 17 17341. What's that? Oh, I sorry, that was my stop loss. It had yeah. Sorry, the best way is just to do it is settings, executions, and I will stick the label on for now. So we will close that off. On the screen again. That's where I entered. So whenever I said I had the fair value gap marked here, and I had my what I would consider two consecutive candles down there was an order block. I entered here on this candle and say it didn't really take off at all. It just came down and hit my stop loss here. And that's it, guys. That's the loss. That's the way trading goes. All this stuff you see on YouTube and all, it's great of all these victories. And why do you never see losses? Why do we never see people genuinely losing trades, or somebody that's on a journey of learning how to trade? Not people that's already made it, not people that's already, you know, good at trading. So I'm on this channel to how show everything I'm going through, show the battles that we as new beginner traders go through, and hopefully, connect with a lot of these conversations we is understanding, and help each other along. We're not going to sit and sing kumbaya together or anything like that, but you know, trading's a lonely enough journey, and it is something you ultimately have to do on your own, as far as I'm concerned. Um, Nobody's going to be able to do this but you. But at least maybe somewhere this helps somebody up and coming that, what, there's the mistake I'm making. Like that loss today showed me the mistake I made, and I'm just wanting to share it to people, and hopefully it saves somebody from making that mistake that I did, and maybe, you know take somebody into their next level. And this isn't my teachings to trade. I'm not a financial advisor. I'm not a professional trader yet. I am an amateur right now. I am a greenhorn. I am a struggling trader who will make it, mark my words. I will not quit. I am relentless as a person, my character is relentless. There's nobody can tell me nothing. Like, again, if ICT rung me and says, "Finny, hang it up. You're not going to make it, mate," I would laugh at him. So what the hell does he know? Even though he knows it all, like, what does he know? What does he know about me? Nothing. But what I've seen ICT, absolutely love it. Please go check him out. Please come back to me with your journey. Maybe I'm explaining something from a greenhorn's point of view that ICT can't see. That he you know he's just that good. Like he maybe doesn't. Like, no, he does. He genuinely does care. That's not what I was meaning to say. I was meaning is like maybe he's not coming from a beginner's perspective. Maybe he doesn't remember what that's like. Although I know he's teaching his son and all, so that's awesome. So he has that actually. But yeah, I just hope I can relate to some of you. I hope you get some benefits out of this video. I hope you subscribe. I hope you come back. I hope you leave a comment. And hopefully we can help each other out on this journey of learning how to trade like ICT. And if we're half as good as he is, we'll be all right. So take care. Happy trading, folks. Have a great week, no matter what obstacles or SHI days you have. Don't get downhearted. Don't be so hard on yourself. Keep going. You can do it. We can do it. Take care, folks, and I'll see you in the next video.